Okay, guys, so we're going to start with exercise 2.2. The major balance sheet classifications are listed in exercise 2.1. So exercise 2.1 shows our current assets, long-term investments, property, plant, and equipment, intangible assets, current liabilities, long-term liabilities, and stockholders' equity, okay? We have to classify these items based on the major balance sheet classifications. Okay? So, prepaid advertising, what do you guys think? Prepaid advertising. Do you think this is something that has a future benefit?
Asset.
It's an asset. What kind of asset is it? Current asset. Prepaid advertising, current asset. Okay? Next. Whoops. Equipment. Property, plant, and equipment. Trademarks. Salary and wages payable. Income taxes payable. Retained earnings. Accounts receivable. Current assets. Land, but this is a key, held for future use. Long-term investments. Patents. Bonds payable. Long-term liabilities. Common stock. Accumulated depreciation. PP&E, property, plant, and equipment. Unearned sales revenue. And then inventory. Awesome, guys. You will see this again, okay? Again, I'd rather focus on what really matters, okay? What's the next? 5? Okay. And guys, you have the solutions to all the problems in here. So those of you that really, you feel like, oh, I'm just not getting it, you've got the solution so you can go and look at these and work them through. Okay? 2.5. These items are taken from the financial statements of Donovan Company at December 31st, 2014. So it's a list of all these items. We have to prepare a classified balance sheet, and we're going to assume that $13,600 of the note payable will be paid in 2015. So what does that tell us? A portion of that's going to be a current liability, isn't it? Okay, so guys, how are we going to do this? Where do we even begin? Start out with the balance sheet? So do we want to start out with, what's the name of this company? Okay. Donovan Company, December 31st, 2014. Donovan, balance sheet as of December 31st, 2014, right? Okay, so what are we going to do? We're going to start with assets. Okay, should we start with current assets? So what do we have in current assets, guys? Current assets, we have cash of how much? $840. What's next? Accounts receivable of how much? 12,600. What's next? Anyone? Equipment is going to be a property, plant, and equipment. So any prepaids? Prepaid insurance. How much is that prepaid insurance? Anyone else? What else would we have? That's everything. So total current assets is $27,640. Now what's next? Property, plant, and equipment. What do we have for property, plant, and equipment? What? Land is how much? 61,200. Okay, what's next? Buildings, how much? 105,800. Less the accumulated depreciation on the building was how much? 45,600. So the adjusted basis on this building is 60,200. And then what about equipment? Equipment, 82,400. And then how much was the less accumulated? Sorry guys, I'm spelling words wrong. Less accumulated. Here, and I'm going to put a row in there just so. Accumulated depreciation is on the equipment. See how we're separating out the accumulated depreciation for each one of these items? Accumulated depreciation on the equipment is 18,720. Okay, and so our total property, plant, and equipment so our property, plant, and equipment section here, let me just do it this way. Total property, plant, and equipment. And then how much are our total assets? Oh, 0. E21, no, FD 10 through D19. $212,720. Do you see how we're breaking them down by category? Right? And then if we would have had in here some intangibles like goodwill, they would have come in after our property, plant, and equipment, wouldn't they have? Okay? Okay, now let's talk about liabilities and stockholders' equity section. We're going to start with current liabilities, right? What are our current liabilities here, guys?
Notes payable.
Notes payable is how much?
93,600.
90. The note payable tells us, didn't it tell us it was over 3 years, or what did?
You have to read.
But the current portion of the note payable is how much?
13,000.
13,600. What else do we have? Accounts payable? What is the accounts payable? 9,500. What else could be a current liability? Interest payable of 3,600. So our total current liabilities are how much, guys? 26,700, right? And then we've got some long-term liabilities. What is that going to be? Our note payable. How are we going to determine that? 93,600 minus the 13,600 that we put over in current is what? 80,000. So our total liabilities are $1,067, right? Now as we move down to our stockholders' equity, how much is our common stock? 60. And then what's our retained earnings going to be? 40,000. But then we've got some things we need to add and subtract, don't we? So let's go back to here. We've got retained earnings. We started January with 40,000, didn't we? Now we've got to figure out how much we made in income. So how much did we make? We made 14,700 in income here. I'm going to, on the side here, 14,700 in income. 14,700. What kind of expenses did we have? Insurance is 780. Depreciation of what? 780, 5,300. What else? Interest expense, 2,600. Okay, so if we take these, that's at 8680. So our net income is the difference, right? This minus our expenses is at 6,020. Does that make sense? Our net income is $6,020. So won't we go back here and our retained earnings is going to be what we started the period with, 40,000, and we're going to add to it 6,020, right? Guys, what would happen if they paid out dividends of 2,000? What would be our retained earnings? It'd be 2,000 less, wouldn't it? Okay, so our retained earnings of 46,020. Okay, so here we've got total stockholders' equity of 106,020. Then what we'll do is our total liabilities and stockholders' equity is going to be what? It's going to be the 106 plus our total liabilities, 212,720, right? And you see how that better balance with our total assets of 212,720? Now, I don't have my columns. I should have this over here. But our assets should always equal our liabilities and our stockholders' equity. How are you guys doing? Does it make sense? You want me to do one more problem and then call it a night, or talk to me?
I'm ready to go.
You ready to go anywhere? How else?
I feel pretty good about this.
You feel good? What I'll do is I'll sit in here after you leave, and I'll do a couple more of the exercises, so those of you who are eager and want to get on, you know, over the weekend, you can listen to them, okay? But we will finish the problem in class on Monday, okay? Do you see, guys, all we're doing is taking what we learned on Monday and we're just adding to it, okay? We're just making it a little more specific, okay? Just hang in there with me. Anyone feeling totally overwhelmed? Good. That's a beautiful thing. So guys, I will do a couple more exercises on the